The following is a technical analysis on Chewy, a company of the consumer cyclical sector in specialty retail based upon the weekly interval, in which we had a very significant surge influenced by a tweet by the prominent meme stock trader known as Roaring Kitty for 150% gains here, where his return to social media known as Keith Gill has reignited interest in stocks he has previously endorsed, leading to increased investor enthusiasm in speculative trading, where Roaring Kitty's influence was massively due to his pivotal role in the 2021 GameStop short squeeze. Some of his latest activity, including a live stream where he reiterated that his confidence in his stock picks and shared engaging cryptic post has created a ripple effect within the market, or specifically his tweet about Chewy, which was suggestive of positive sentiment, led to a rapid increase in the stock's price, as his large following interpreted it as a bullish signal, where this underscores the power of influential figures within the stock market, particularly within the meme stock and the Apes in the Ape Village community, where sentiment and speculative trading can drive significant price movements, where the surge in Chewy stock price really shows the impact of social media and influencer endorsements on market dynamics. And that was a significant rupturing surge straight into pure technical analysis, to the pure technicality of the 200 exponential moving average, call it the 200 weekly exponential moving average. And that was rejected impulsively off a 30% crash to the downside, especially if you're an active and or short trader, short seller. That was a prominent big price resistance level based upon the $39.53 $40 range, and again was rejected impulsively off the 200 weekly exponential moving average there. And here we are zooming into the daily interval, where I believe some key transitioning price pivot points are beginning to underscore a short trade setup here, zooming in within the daily interval, and some key junctures off based upon, call it a multi-year price resistance level based upon the February 2021 major reactionary highs. And that has been a telling point for any short sellers, short traders to really capitalize on some big market crashes there. That first initial rejection was good for a 70% crash. You had a second backtest and or rejection, which was good for a 76% crash. And that has been respected heavily here in the near term, where we were rejected off that 200-day moving average. We have a primary minor reactionary uptrend line off the May 2024 reactionary lows here with a complete unfilled and unchecked gap. And we are trading slightly above it off a really good price support level, call it the 2530 price support range, in confluence of its primary reactionary uptrend line. I would like to see, especially for any short sellers and or bear traders, they want to see a solid red daily candle close below, cracking that duo price support level with conviction, ushering in a great valuable short risk reward short trade setup to the downside, targeting the second price support level for a 17.3% crash down. I'll even give it to the middle before the top of the gap there. I'll give it an extra target here for a 24% crash down to 1844 if we overshoot the top of the gap, in confluence of the 200-day moving average for a 32% crash, and then ultimately a complete backfill of the gap to the 1696 price support level for a 38% crash. We have huge spike in sell volume, and I believe we'll begin to have the beginning stages for a lower transitioning point and a plethora of declining volume, where you have the oscillator histogram beginning to wane momentum down to its zero line. That could potentially set up the beginning stages for an initial and further violent decline on a complete solid candle close below and a breakdown below its zero line there. That would ultimately add to the odds department and increase the odds for a much larger drop to come. As of now, there are no additional significant transitioning points within the technical momentum indicator space, suggesting that this could still otherwise go either way. Once again, we take this level out with conviction. You are going to expel further technical damage within the key technical momentum indicators, ultimately justifying their attempt at retesting some of the zero line thresholds, and that would be the ultimate space. Long-term traders and or bull traders, they need to defend this level really at all cost, go on to re-challenge and retest that primary reactionary downtrend line, and ultimately take that level out, pop that level around the $32 range, hold the primary, which would now resistance become support, and additionally go on to re-challenge the $40 level price range at the 200 exponential moving average. Any short sellers that are beginning the scale and end process short here, I believe will begin to get squeezed out amongst breaking out of that major reactionary high, ultimately taking out stops out of the short selling position, including my short size position, and then ultimately re-challenging that $40 mark. Bull traders, long traders need to take that level out with all conviction, defend this price support level to avoid a potential defense of an unfilled and unchecked gap.